This is Jay Martin.
All right, here I am with John Feneck. John, it's great to see you and have you on the show.
You too, Jay. Thanks for having me today.
Yeah, my pleasure. I'm looking forward to chatting and picking your brain. We're going to go a few different directions. The first place I want to go is if you're a gold investor and you pay attention to most of the media that comes out in the macro landscape, there always seems to be a gold bull market right around the corner, right? And
Right.
my first question for you is it time to be allocating cash to gold equities? And then we'll get into maybe the various stages. But question number one, are you putting cash in gold equities right now?
I am. We are heavily weighted towards juniors and mid-tiers right now, which hasn't been a popular place to be over the last 6 to 12 months. But we talked about, pre-shooting this, I just think that, some of the prices in the Explorco area are now lower than March of 2020 lows, which makes absolutely no sense. That's basically saying that these companies have done nothing in 27 months, and that we're in a pandemic panic mode, kind of environment. Yet gold is at 1820 plus or wherever it is right today. So it doesn't make any sense. It would make sense if gold is at 13 or 1400 or even 1575 to me. We would be sellers if we broke that 1575 level that held so long, right? But it's not doing that. Gold is actually trading pretty well in my view. It's just, like you pointed out, so many people are calling for 5,000, 8,000, 10,000. It's like, based on what? What are you guys looking at? Like, it's not even eclipsing 2,000 with any volume. So, you kind of have to look, we're mining portfolio managers. We have an incentive to say silver's going up, gold's going up. But all year long, I've been saying silver's never going to break 30. It's our third largest holding. It's like, it hurts me to say something like that. But I think that clients need to be patient. And that's how, Jay, I think we're going to attract more real money to the sector, is by being straight with people and saying, this is going to take a year or two. It's not a quick fix like Bitcoin was 6 months ago.
Yeah. Okay. I love that. I want to pull on a thread though. So can you make sense of the price softening in the equities market? Why is there no general cash moving towards the sector? I feel like there's no leader right now, right? There's individuals, maybe like you or I. I mean, you said it's not a popular place to be, junior gold equities, which is kind of like, that means we should be looking there, right? But simultaneously, like, there is no leader. There's not a lot of institutional money. There's no generalist funds. Like, why is that, John? What are your thoughts?
It could just be what we saw. The question I get a lot of times is, why did gold sell off in March of 2020? And the answer was to meet margin calls. It was a store of value then, it still is. But when people have to sell things, they have to meet margin calls a lot of times, and they're going to sell everything to do that, right? If you have, Bitcoin go down precipitously like it has, Ethereum, you're going to cover those losses with winners or things that are just flat, like the gold price. So, that hasn't helped, but I think we're going to get to a better place. I mean, I pointed out to my followers since May 18th, I've noticed that GDX and J have started to trade on certain days like a hedge. And that's what you need in order to get really excited about our sector again. Point out a particular thing for you here, Jay. June 10th, we had CPI come in hot again. Really surprised people that was that hot, and gold, silver, GDX, and J all rallied together. That's the kind of price action I want to see as a portfolio manager more and more, where we get those kind of outside surprises, and then people start putting some money into our sector. We need to see that over and over again. And if you look at December of 08 into June of 09, GDXJ actually moved about 180% up. I don't think you're going to see that kind of precipitous move again, but you're clearly going to see a move here after we get some more pain. And unfortunately, there's probably a little more pain to come with the Fed being, as hawkish as they are.
You think so? Okay. Now, one thing I've been curious about is we're seeing an accelerating trend of central banks increasing their allocation to gold. And the reason it, I think, is interesting is because our job, or my job as a retail investor, is to try to find that avalanche of money before it occurs and then get myself in front of it, And I interview people like yourself. I have, a few guests on per week. I look for consensus. Like, where is John putting cash? Where's everybody putting a bit of money right now? And once I see, consensus sentiment move towards one sector, I know the price is going to go up because there's a tsunami of money going that direction. Now, is the central bank rebalancing, that globally central banks rebalancing their reserves to include more gold? Do you think this could be a trigger point for us to see then funds increase their allocation from 1.5%, 2% up to 5%, right? Because from then we'd see more generalist hedge funds, et cetera. And then, the flood of money occurs. So is there substance to that thesis, or what do you think?
Yeah, it's not something I spend a lot of time thinking about because I just look at price, every single day, every single week. And, thinking about what you just said, it makes perfectly good sense because we've said at Feneck Consulting for months, if not years now, since inception 3 years ago, that you need to have, like, if you look at the S&P, right, how many gold or silver stocks are in the S&P? It's one, it's Newmont. It's 1 out of 500. Like, it's nothing. You need to have 10. You need to have, Barrick, Agnico. You need all these things added. And it might take months from now to get to that point. But when you get, instead of 1% exposure and make it an actual percent even in mining stocks in something like that, or the Russell or the NASDAQ, you could actually move the needle significantly. And to my point, look at December 15th Fed meeting. Newmont was at 51 bucks. It ran, I think, all the way to 85, 86 into April, based on institutional money coming into that stock because of the dividend, in my opinion. They saw, the margin that we all know, right? They're getting AISC of, let's say, 10.50 an ounce. Gold was at 1,800. They're making 7.50 an ounce net. Really good margins plus a 4% dividend. Portfolio managers that are large cap in nature are going to look at that and say, this is interesting, but they don't understand how small Newmont is. Yeah, it's a large gold stock, but it's a small stock in general for the kind of stuff they're used to buying. So they moved it.
Hold up, quick interruption to shout out one of our partners here at the Jay Martin Show. This is Masterworks. Now, Masterworks is a platform that gives retail investors like you or I the opportunity to fractionally own pieces of blue chip art. So we're talking about Picasso, Monet, Banksy, etc. Now, why is this exciting? Because the smartest money that I have on my show invests in the art sector. So I want to do that too. Now, last year, I actually bought 2 pieces of art for my home. But knowing nothing about the art industry, I have no idea how they're actually going to appreciate over time. Now, I like them, and maybe that's enough. But if I want to put my cash to work in the art sector, I really want to go after the biggest names in the business, the multi-million-dollar pieces. And this is the access that Masterworks gets you. So check out masterworks.io now. Yeah. Okay. Now, where are you putting cash right now? You mentioned juniors and mid-tiers. Talk to me about, like, do you focus on jurisdiction? How do you assemble your watch list, John? And what are the criteria that you keep front and center?
Sure. Management is always the first screen. I like to meet people either via Zoom or in person and really have multiple conversations before I jump in with any big position because I want to get to know them. I think one of the other screens is share counts. Honestly, like, some great stories out there that have 400 or 500 million shares as a junior. It's not as interesting to me in most cases as someone who has 100 million or 150 million, because now again, I should quantify that to say, our largest holding has 188 million shares out. It's Golden Minerals, AUMN. But when you look at who owns that, Sentient, a hedge fund, owns 30 something percent of that. Barrick owns like 5. Hecla owns 2 or 3. I own 2. You start doing the math, and half of the float plus is out, right? It's not going anywhere. It's not being traded. So really, that's about a 90 million or so, fully diluted stock, and that's attractive to me. So we like to have, bigger positions in names like that where we could have some impact, or the news itself could just have some impact. I guess also jurisdiction, as you pointed out, Jay, is very important right now, because you look at Chile, you look at Peru, you look at the Congo. I mean, you look at all these places globally, and to me, it's you have to really cherry pick some names. Again, that comes back to management. I own Aftermath Silver in a small position because I like Michael and Ralph, and I like that they're very honest with me, and I can live with the risk. Mm-hmm. Because Peru is not going to be Peru as it is today in probably a year. Castillo will probably be gone. And then you basically have a regime change, right? It's like when you look at copper globally, where is it coming from? It's coming from South America, from Chile, Peru, and some tough jurisdictions, right? That's why I like copper as well, because 45% of the world's copper is coming from bad jurisdictions or politically unstable areas. And so, supply demand imbalances are existing in copper already. And I think that's going to continue. Is the electrification of the world going to stop? Absolutely not. Copper is needed. It's going to have to be found. And Barron's put out a great piece, and pretty much the first week of January, talking about that most copper, companies that aren't producing right now, it'll take them 5 years to be a producer. So it's like, where is this stuff coming from? That's why we're buying a lot of copper juniors right now that have, developed a little bit further down the road and have management that have run bigger companies. They know how to monetize that for investors. It sure isn't showing up in the prices right now, but I think, if you can buy some good copper juniors and put them away for a year or two, copper will test that, all-time high again here, probably within 6 to 12 months, in my view.
Interesting. Yeah. I mean, there's not really any other solutions. You're right. Where's the supply going to come from? And, everybody points towards electric cars often. The story is obviously much bigger than that, unless the entire world collectively decided today that we're just going to stop growth right now, full stop, globally, right? Like coordinated effort. You can have slowdowns in various countries, even powerful countries, and still, human beings are going to keep moving forward. That demand's not going anywhere.
Right.
However, your short-term outlook, I saw a couple reports come out this week, one from 8 Capital this morning, encouraging investors to reallocate their copper holdings towards gold for the next 12 months to account for, the recession in the United States. Do you think like that, or do you not sweat like that's a short-term blip? I don't care. My time horizon eats that up, so I don't worry about what's going to happen in the next couple months. Talk to me about that.
Yeah, that's a great question. I think if copper really broke down, 350, 320, some major support levels that were former resistance levels on the way up, that would get me to get less bullish on copper. But we just broke $4 literally today with any volume, right? So $4 is sort of a line in the sand. It's a nice round number. It sucks that it broke, but it's okay in my opinion. I'm not panicking. I think most of the copper juniors are so bombed out that it doesn't. What's the risk of a 7-cent stock going to 6? To me, it's like, yeah, it's 13% or whatever it is, but it's like I'm okay with that because I think that the longer game is there's no supply, there's a lot of demand.
Got it. Now, do you think, is there a bit of a trade-off when you think about jurisdictional risk? And you go to a country like, okay, this deposits in the United States, you could say that's going to be more secure, right? It's a stable government, less risk of nationalization, but the headaches involved with permitting are astronomical and could be just as risky as nationalization down in Peru. Is there a trade-off there? Like, do you look at it that way?
I think I gravitate in the States towards Idaho, Wyoming, Nevada, places that will have experience, in the past of getting things permitted. There's other places like California that are really by county, I've talked to some juniors there, and some of them I'm not really interested in. Some of them, we've got on our watch list, but we're not necessarily buying a bunch right now because it's a tougher state. I've liked Idaho for, a couple of years now. I've made a lot of money there. It's the 8th best jurisdiction globally. And, I own a gold company there, Idaho Champion, that's got a bunch of cobalt assets that are attractive to me. They're shopping those internationally right now. That makes sense to me. It's like, hey, the gold stuff as a pure gold junior isn't working, necessarily in this environment right now. You've got to find a way to tell a different story. If you've got another asset or another way to generate interest in your stock, let's talk about it, right? It's like, get people interested that may have no interest in gold, but understand the cobalt shortages and that the Congo produces 70% of the world's cobalt, right?
Yeah.
So, I think Thunder Mountain is another one in Idaho that I've started to track and buy a little bit. THMG, they are, one of the oldest gold companies in the U.S. actually, and I found them 2 years ago when I talked to Eric Jones, the CEO, and the stock just took off into the summer of 2020 rally on speculation like everything else, right? And it's really faded all the way back down. but they have a really interesting partnership with B Metals, which, if you know B Metals, it's a junior company that was that Clive Johnson from BTG has a ton of money in. So, you kind of look at those things and say, okay, BTG is a great company in my view in terms of, potential growth for gold, mid tier. B Metals has got some interesting things going on. That deal, if you look at Thunder Mountain's website, looks like it's going to happen, and that deal will happen this year. So again, when we talk about investing in stuff, I don't necessarily want to look out, Jay, like 3 years. I'm not that patient, but hey, this is happening in 3 or 4 months. Like, I mean, why not buy some, right? It's like there's probably some significant upside there. It's just not being seen that way.
Okay, yeah, I'm with you. Can I ask you for any mid-tier names that you're excited about right now, John?
Yeah. SBM comes to mind in the silver space, Silver Corp, trading around 270. They've got 220 million in cash. They made a bid for Guyana Goldfields, if you remember, not too long ago, and that failed, and they lost to another Asian company who paid like a ridiculous amount of money.
Yeah.
But Rick Roll has said that's one of his favorite silver stocks, and they're one of the only profitable silver producers. The knock on them has been their exposure to Asia, but when you open when you look under the hood, you notice that they have the 220 in cash. They've got about 164 million in investments like NEWP stock and other equities. So when you do the math, they're trading at like 3 times free cash flow right now. I just think that they could surprise the market with an acquisition that is not in China, right? And then they get diverse, and more money flows into the stock because advisors can buy stocks that are over $2. Some shops it's over $3, but you kind of have they're right there, right? So they could attract some decent money in time.
Love that. Okay.
Mid tiers, otherwise, I'd say it's really it's tough right now. I mean, I've bought AG, over the years. I really like, what they're doing, but right now we don't own any because I feel like they're very susceptible to a silver downturn because they tout themselves as a big silver player, right? So like if that's the case, I've seen that other side of the story happen in fall of 2015 when the stock got cratered, and that's how I met Keith. I called him up and I said, hey, what's going on? Is there anything material here? And he said, no, it's just the market. So we started to load up on that stock between $3 and $4 in Jan of 16, and it went all the way to, I don't remember, like 17, 18, something crazy. It was one of our best stories. So, I always tell people, I spent a brief amount of time on the silver PM team at Sprott, and what I learned is that silver is like a caged beast. It can just explode when you don't expect it, but that doesn't mean that you go and buy it right now. It's really on the precipice. It could go either way. So I want to get some confidence as a portfolio manager that it's going to be okay, and it's going to be somewhere in that 21 to 23.50 range instead of going towards the 19 range.
Yeah. Okay. You mentioned B2 Gold. I'm a fan of Clive, just in general.
Yeah.
Have you looked at I-80 Gold?
I've looked at it, but it's been a while.
Okay. Caliber?
Yeah. Yep. I own some Caliber. Came out with really good news again today. It's amazing how this market is. It's like it just doesn't even care. It's like, I mean, I think they grew by 15%. I see so many news items. I'm not sure, but I have a good relationship with them, and I like the stock. And Nicaragua is a pretty good jurisdiction as they come.
Got it. Okay, now moving earlier in the food chain, we're looking for those wild ass speculations, John. What's catching your eye? What's getting you excited right now?
On the wild side, on the spec?
Yeah.
Okay. So I found this copper stock at $0.015. It's WTCZF. I did my own due diligence to find them. I talked to Terry McDonald, the CEO. He said, look, we got bombed out by Dundee. They owned a lot of our shares. They just blew it into the market. Stock went from 3 cents to $0.015, and it's never recovered. This was a conversation in the fall of 2020. So we wrote it up in December of 2020. We brought some volume into the stock. It's basically, it raised some money in 2021, but their looking at, a VMS, system there that is just gigantic, that could be really, really big. It hasn't been drilled out since the 1980s in Marshall Lake. They also have another one in Norton that's a backup to that, which is palladium, which I like. So, you get copper and palladium and gold with that play. It's run up a lot. It's come all the way back down almost. It looks like an inverted V, the chart. So I think if you get a discovery there, that thing is going way north of where it was in 16 cents US. I mean, it's got some real potential because you look at the board and it's all geologists. I mean, these guys have been doing it for 20, 30 years each, So like I look for juniors like that, yeah, I mean, look, we all have lottery tickets in this business, but you can't put like 10% of your portfolio into something like that, in my opinion. I know Rick Rule and some other guys talk about, hey, take that, buy 8 or 10 names, but you got to understand where they're coming from, right? Rick's a wealthy guy. He's made a lot of money. He's super smart. Like, it doesn't mean that you should do that, as an investor. It's like we run a portfolio of 45 names. So, when you're asking me for something spec, that's something in our portfolio that's spec, but it's probably a 2% position.
I see. Okay. And what was that ticker? I didn't quite catch it.
Sure. It's WTCZF. I quote everything in the States because I'm a US based manager. Sorry.
Yeah. No, it's all good. All right. Here they are. Copper Lake. Okay. Got it. All right, cool. Let's talk about portfolio construction a little bit because you hinted at that. And I agree, it's hyper important. And so how do you protect yourself? What do you have on the safe haven side, or how do you structure your foundation so that you're comfortable putting 2% on a company, super spec, high risk, all of this?
Sure. So we use what we call a hub and spoke, structure in the portfolio management business. And that means, your hub is going to be your conservative, not conservative, but your core holdings, right? So that for me is silver. I own 0 gold right now, but I do own some silver. I own GDX, because it's been holding that 28, 83 level here multiple times now. And then I'll own, a percent, 2 to 5% in cash as a buffer, usually if I'm bullish, which I am right now. So we're frictional cash like that. And then in the spokes will be, names like Copper Lake that I just gave your listeners, but also others that have, more of a foundation and more of an established, background already, like Yamana, what we were small shareholders of when they got the news about GFI. And so we'll buy names on the fringe like that. And we really pay attention to how much exposure we have by metal, right? So like we're very deliberate about not going over our skis in gold or silver like most of our competitors do. We don't run a precious metals fund. We run a metals and mining fund. So like mining to me means everything. If someone wants to talk to me about nickel or manganese, I'm down. It's like I want to get ideas from everything. So I try to challenge myself every week. I don't know everything about all these things, but I pick up the phone, I call CEOs. That's been my style for, as long as I've done this. I have a 6-year track record. But previous to that, I was in mining for 14 years with my own money, and I would call these CEOs and just ask them direct questions. I think it's a great idea to do, especially at this time, because Jay, from your conference in May, it's like a lot of investors showed up. They show up to have that 5 to 10 minute talk with someone at a booth, and walk away with an experience, right? And that's how you get excited about the space, but also how you sleep at night with the risk, because you had those conversations.
That's the most important thing, isn't it? And you mentioned people as your first criteria, which touches on this, and you're absolutely right. And what people may not realize when they're investing in the junior sector is that those CEOs will take your call, right? They want to talk to prospective shareholders. That's their job, right? And if not, they'll have somebody in the team that will, right? But you can get to them really easily. It's not a massive corporate bureaucracy at that level. You're investing in the integrity and judgment and decision-making of like 1 or 2 individuals typically, right? So before you let them have an adventure with your cash, pick up the phone, come to the show, whatever it is. But yes, 100%. It's a personal relationship and should be treated as such. Absolutely. I love that. I love it. Very important.
Yeah. We have a Rolodex of probably 300 different CEOs over the course of, a decade plus that I've been hitting the phones, and you know, you can hear certain things in people's voices that are give you indications. I'm not talking about like information that isn't public. I'm simply saying if you talk to a guy 20 times and they've got projects in Mexico and Argentina and they keep going to Argentina, but they only have one project there, you know, why are they doing that? This guy lives in the States. Why the hell is he going on planes to go to Argentina all the time? Because there's probably going to be a deal. You know, it's like that these little things you can put together by just being smart and you know, making you know, notes and keeping track of things.
Yeah. Yeah. And you can tell a lot. And it's important to trust the people you put cash with. You don't
Right.
always get it right, but you need to try. Absolutely.
Mm-hmm.
Anything else you'd like to leave the audience with, John, before we wrap it up?
Like you said, I think, you know, it's a very difficult environment right now, but it will change in my view. I think that people that have held on this long, if you've been an investor from summer of 2020 to now, this is not the time to give up. It might feel like it because you're starting to see household names start to crater now, but that's the reason you hold, is because the Netflix, the Facebooks, the Walmarts, the Targets, these household names that are getting crushed, this is not a normal correction. This is the big one that people have been talking about, and we're like in inning probably 3 or 4 right now. Like there's still more pain to come in the broad market. We know nothing in the broad market at all. I run an energy portfolio as well, so I mean I have that, but even my energy portfolio is 55% cash right now. We think that there was a double top put in the 120s in oil, and I said that on Kikko last week, which isn't live yet, but it's basically you know, it's being propped up by the Russian-Ukraine conflict, in my view. So,
so you think even when China comes back online, because I know a lot of their industry is parked right now, right, in the zero COVID policy, you don't expect that, or do you expect that to spike energy prices again, or do you think that's not as significant as an event as I might be thinking it would be?
It could be significant, but I think the price move in something like, you know, we use ETFs to track different things. So USO is a tracker for oil, UNG tracks nat gas. If you look at these moves, I mean, I wish those were mining stocks, because I would probably be shorting them at this point because I've already made so much money, right? It's like that's as a value manager, Jay, that's how I think, right? I don't get greedy. If UNG goes from 8 to 31, it's time to sell. You've got to take some off the table. I mean, nat gas just doesn't go straight up. It was one of the worst commodities of the last decade. So, you know, these things are going to get traded by professional traders. And so I just think you're just ready for a breather. I agree with you that there are going to be outside events that will drive energy higher. It's just that, you know, I think a lot of the easy money has been made there. And a lot of the easy money has been made in the broad market. You know, we hate travel and leisure and certain things that everyone's in love with here, because when you look at the pandemic lows, something like these hotels are literally 3 or 4 times what they were worth in March of 2020. And I just don't see how the revenue is going to be there in coming quarters.
Mm-hmm. Yeah. Yeah. I know you were, I don't know if you still are. I know you were shorting travel maybe a month ago. I heard you on an interview. Still the case?
Yeah, we've been shorting travel since January. I think January 5th for me was like a very important day. When the Fed went hawkish like that, we put a lot of shorts on, because I just said, this is different, right? It was like listening to Powell in January of 2019. If you remember, he was at like a Yale or Harvard event. It wasn't even a planned speech. Yeah. And he got super dovish. And that's when we went all in 2019. And we had a great year that year because we were watching the Fed. This year, that was your indication to get short the broad market and to be very careful with bonds and do the things that we now know to be true. But how many people actually follow through on that? I think now you're starting to see people look at shorting stuff, and I don't think it's too late. I really don't. Not in travel and leisure. I mean, tech has been pretty smoked, but there's still some fluff out there. And when you look at, I encourage people not to look at 1 or 3 year charts. Look at 10 or 15-year charts. You know, you'll see some of these things are going up 10x. You know, over 10 years. I mean, there's still a lot of money to be made in betting against some of these companies that are just pounding their chest.
Yeah, yeah. I wonder about the travel correction because prices are getting crazy, and
they are,
and quickly. You know, I'm taking my family up on a camping trip in Haida Gwaii, though. It's a mission to get there. It's, island chain 50 miles off the coast, the West Coast. And when I should have bought our plane tickets, because you have to fly there, they're about $300 a pop. And by the time I finally got around to it and pulled the trigger, they had tripled in price.
Wow.
In the course of about 2 months. Yeah. So I'm kicking myself. I'm still having to get them. Anyway.
Yeah, no, I think that the oil run up, the airlines are passing that on to us, right? Because you can look all this stuff up, but it's really boring. I mean, you can see what hedges are being put in place by carriers. I remember going short JetBlue many, many years ago because they were really, I don't know what the appropriate word is, but they were basically not hedging anything. They were just totally exposed to a rise in oil. So when that rise came, we made a lot of money on that trade because they just got screwed. They had to buy at any price, right? And now those kind of companies have learned their lesson, but still they're passing it on to us. They can easily justify, a double or a triple in price. But the question is, to your point, when does the average investor just say enough's enough? I make 50 grand. I'm not going to spend $3,000 on a 3-day vacation.
100%. Oh, absolutely. Absolutely. Okay, look, John, this was great. Thanks so much for making the time. And
Sure.
yeah, I'd love to have you at our next event. Let's do some content together, create some panels, and January 29th and 30th back in Vancouver. It's a fun town. Yeah.
I'll be there.
All right. Well, thanks for your time today. I appreciate it.
Thank you, Jay. Appreciate it.
All right, thank you for watching this interview. Now, 3 things before I let you go. Number 1, I publish a weekly newsletter and I love writing it. I share my biggest takeaways and action items from the conversations that I have on this channel. In addition, my thoughts on current events, economic events, political events, and you can subscribe for free. Just hit the pinned comment right beneath this video, or just go to jmartin.club and you can subscribe on the website. I'd love to have you join the team. Number 2, ad revenue from this channel is donated to an organization that is super close to my heart called Zero Ceiling. Now, Zero Ceiling's mission is to end youth homelessness, and the way they do this is by giving at-risk urban youth the opportunity to relocate to beautiful wilderness areas and then provide them with supportive housing, career training, and just generally positive influences on their life. I love what they do. Check them out if you're interested. And number 3, if you prefer to listen to my content as opposed to watch it, you can find me wherever you listen to your podcasts. Just search for The Jay Martin Show. All right, thanks again.